in partnership with CommSec.
Major economic news from the US this morning. The Fed Reserve slashed its cash rate by 0.5%. Joining us live from CommSec, Tom Piotrowski. Tom, what's the bump been since and the flow-on effect here today?
Pete, it's a good question. It's been a session of contrast following the Fed's supersized rate cut. They cut rates by 0.5%. There was a reasonable chance that they would do that. It was around a 60% probability. So that was interesting because for much of the session, we didn't see any activity in a meaningful way. Afterwards, markets surged. We saw gains in the order of about 1% for the three leading indices. But then at the conclusion of the Fed chairman's press conference, we actually saw markets finishing in the red. So they were down in the order of around 0.2 to 0.3%. So look, you can still contextualize this in terms of some consolidation. The market is still encouraged by the outlook for interest rates. We're expecting two more rate cuts between now and the end of the year of 0.25%. The growth forecasts are still largely held intact. A bit of a bump higher for the unemployment forecast, but by and large, the market has gotten what it wants, and you've got interest rates at their lowest levels in around 2 years when you're looking at bond yields. So it's still a pretty constructive picture, but the initial aftermath, a bit of a fizzer, you'd have to say, Pete. But in terms of what we can expect locally, the futures are pointing to a decline for the ASX 200, down by about 0.5%. We have our own highlight to contend with today, with the unemployment figures being released. The expectation is that we'll see around 26,000 jobs added to the economy and the unemployment rate at around 4.3%. So that is where the attention will be trained as far as the local experience is concerned.
Alrighty. Tom Piotrowski, thank you.